Yeah, alright, my dear traders. Today I've made for you this video. It is even on Sunday. Today we are having the finals of FIFA World Cup between the two dangerous countries, Spain and Argentina. So it is the day that I made this video around midday. So it has been a while from the day I last made for you videos like this because I've been undergoing emotional problems. So remember, one of our rules as forex traders, we don't have to trade during emotion period. So I had got some challenges, so I decided to take a break. But I'm back from the break. Let us proceed from where we ended. Today I've come with a very good package. It is a beginner friendly package, and we are going to be mentoring beginners, showing them how the market works. Those people who do not have any idea at all about this, they are going to learn it today. So I'll be taking them through what is a market trend. How does the market behave? What is meant by bullish, bearish, such things? When can we realize that we are going for a bearish movement from the bullish movement? Such things, such that they can also get to know what they are entering for. Yes, remember, this thing is not hard, but you are the one who complicates the things. So let us begin from there, and then I'm taking you straight into the market. Yes. Yes, so here we are at the market, and as I told you, we are going to be talking about market trend. Without wasting any time, this is our market. Uh, so far, before I introduce you to the market, we have to know how the market behaves. In the market, we have two things. We have what we call an uptrend and a downtrend. An uptrend is always like this. We go up, we go down, we go up, then we go down a bit, then we go up, like that, like that, like that. So that is what we call an uptrend. Then we also have what we call a downtrend, and in a downtrend we always go like this, we get a pullback, then we proceed down, we get some sort of a pullback, then we proceed down, then we get a pullback, just like that. Yeah, so having learned that one, we have to know how this behaves, how this comes about. For example, we have in this section here, this section is for the time frame. So here we are on the 30 minutes time frame. So the time frame also matters. So if this one was a 1 hour time frame, it means inside it we have many time frames. Like when we are moving downwards, that is what we call the bearish movement. When we are going up, that's when we call the bullish movement or the uptrend. So on a live chart, this can be seen like, for example, here we move down here, then we go up here, then we go down here, then we go up here, just like that. So that is the example of a downtrend on the live chart. When we are in a downtrend, for example, we are moving from here going downwards like this means we are creating, this is a lower low because it is a low found on a downtrend. This is a lower high after price making what we call a pullback. This is a pullback. When price moves, it doesn't just move straight, boom. No, it doesn't just drop down one straight like this, boom, but it goes on pulling back, going down, then pulling back. Yeah, so if we are to go to an example of an uptrend, let us go to an example of an uptrend. We see
how the market behaves on an uptrend. Because we are going high and the place is low, from there we come here, we create a higher high, create a higher low, then we create a higher high, then we create a higher low, then you go and create a higher high, just like that. So that is how it looks like when we are on the uptrend. I told you another name for uptrend is what we call a bearish movement. This is when the bulls are in the control of the market. Having learned that, let me first summarize for you what I have told you. I've told you that when we are moving up, the price does, or the market structure does not just fly upwards like this, no, but instead it forms lows and highs, lows and highs, lows and highs until when it goes up. Yes, having known that one, and the same thing applies in the downtrend. We form lows, highs, lows and lows, highs, lows and lows. Having known that one, we I'm going also to talk about the last thing you have to know is that when we are when we are on a higher time frame. What is a time frame? Like here we have a lot of time frames. We can find a 1 hour time. Okay, let us begin with the 4 hour time frame. This is the 4 hour time frame. On the 4 hour time frame, we can be moving like this. For example, we are in an uptrend. Price goes up. After going up, it makes some sort of pullback. As I told you, this is a pullback. After making that pullback, then it will move and go up like this. So this is on the 4 hour time frame. It is on the 4 hour time frame. This is found on the 4 hour time frame. This is the 4 hour time frame. We want to see how this can be on a lower time frame. When we drop down and we go to a time frame, for example 1 hour time frame, we can find that price has been making other structures inside. For example, like this, to make just this one, price was making other highs and lows inside, other highs and lows inside, other highs and lows inside, until when it reached where it is. So like that's how the market can move. So this blue is the 1 hour time frame, this red is the 4 hour time frame. Okay, now let us do this practically. Here we are on the 4 hour time frame. As you are seeing here, in the 4 hour time frame, let us track. We are going to track this. We are going to track this big red candlestick. I know that you may not be knowing what we call a candlestick, but a candlestick is these things we're seeing with wicks and bodies, weak bodies. I'm going also to make a video talking about candlesticks. So let us track this 4 hour bearish candlestick. Those ones we are seeing that are red are the bearish, the ones that are blue are the bullish. Okay, let us put a rectangle onto it. After putting a rectangle onto it, we are going to be dropping down and we see really how this, and we see how market structure is forming this candlestick on the 4 hour time frame. For example, this is our candlestick on the higher time frame. If we drop down, for example, on the 1 hour time frame, and we look after dropping to our 1 hour time frame, we are going to look for where we put our triangle, our rectangle, and we see. Do you remember that we put our rectangle on one big candlestick? But now that was on the 4 hour time frame. Now on the 1 hour time frame, we have we have many candlestick patterns on the 1 hour time frame that formed the other bigger 4 hour time frame candlestick. This is the 1 hour time frame. So a collection of these ones formed one big candlestick on the 4 hour time frame. So let us drop down up to the 30 minutes time frame. On the 30 minutes time frame, if we are still look for where we put our triangle, we will find out that again more and more candlesticks have been formed. This will show us that a series of many candlesticks on the small time frames are the ones that make up a big candlestick on a higher time frame. If we are to look, let us look and see where we placed our now you can see this is the 30 minutes time frame. Are you seeing that we have many candlesticks, many candlesticks than what we had on a higher time frame?